Well, we're at that segment where we talk about business, the economy. Of course, when it comes to economics, the numbers don't lie. And it's 1 year down the line, the government has made some quite, let's call it difficult decision. And they admitted they were difficult decisions, like removing fuel subsidy and floating the naira. And now all the numbers in the economy, the macroeconomic space, is all in red. And so to rein in on inflation, the Monetary Policy Authority, they've been doing their bit by hiking interest rate. The latest being 150 basis points to 26.25. But that is biting hard on the local economy, although they argue that that is bringing some level of FX accretion into the country through foreign portfolio investment. But it's a delicate balance. But we want to talk to the people in the know who are affected by these numbers, not just the figures and all of this, by the businesses they do day to day. We're being joined on the program by the CEO of Coleman Wires, Mr. George Onofowokon, joins us right here in our Abuja studio.
Thank you.
Well, it just hits me
Jeffrey,
like
you just transported us to our Abuja studio.
Oh, in our Lagos studio.
I see what you're doing.
Oh, maybe this traffic affected me. I don't know. So let's begin from when manufacturers like you had those hike, because people were speculating, are they going to hold, are they going to decrease or reduce rather? What is it going to be because of the inflation numbers not coming down? But now, yet again, 150 basis points. How is the manufacturing space reacting to this?
I think for looking at the perspective from the manufacturer's point of view, there's no manufacturer that will be excited over an increase in MPR. Understandably expected. I think people were speculating 100 basis point. They've gone for 150, but I'm happy that after the statement, I think as of yesterday, they came out with a statement that most likely there'll be a rate pause on any further increases, because I think it was very aggressive over the last three MPC meetings, last one, and for that reason, at least that's a little bit of comfort. But the reality is your cost of funds is going up again. Now, you look at any manufacturer, when your cost of funds goes up, it affects literally everything with the bottom line, and it's passed on. Now, that's for those that can pass it on. For those that cannot pass it on, is cost of funds going up, financing costs going up. Eventually, your cost of sales goes up. And what do? We're already in a conundrum of the manufacturers getting hit so much. The worrying factor, I think, for me is what next? It's one thing for us to actually have a situation where cost of funds is going up, the financing cost of any business, irrespective of what you're doing, it's going to go up. Most likely, most of the commercial banks by this week will start writing everybody and skyrocketing the price and passing it on. Now, but where are we? We're struggling. And the whole business for the last 1 year is in a negative position. Hit by exchange rate losses. You could imagine, take a manufacturer like a kid that did not know what they did to their father or their mother and got whipped. And the whipping is so bad that you're literally sitting down here and keep dreaming or thinking, what did I do wrong? And that's the unfortunate side of it. Because the manufacturers have been so whipped to the point where they're asking, what did we do wrong? And sometimes you look at it, I use that analogy so that it's easy for all of us to understand how badly the manufacturers have been whipped. But the consoling part is that we see it within our parents, where when they even get it wrong and they've literally punished us for what we really did not do as much, they tend to come back and literally pat our way back into the sorry scenario. And that's where we're waiting for. The reality is, yes, we've been whipped. Yes, we've suffered. But what next? Now, that is where the incentives or the balancing act of an MPC comes into it. And it's an MPC meeting literally has generated what it's supposed to do. Sincerely, I don't think there's a surprise to that figure. For me to say they keep it old would be a tough one, because you look at your April inflation figures at 33.69. It would be a tough call for them not to see that increase come up in a May MPC meeting. Now, what question we want to all ask is that, okay, we've been whipped. How do you create palliatives to balance the actual amount of weaknesses now being seen in the manufacturing sector, which literally creates biggest amount of employment in this country? And that is where I think our focus should be, rather than to the guys, as I said, you said earlier, it's driving FPIs, which is foreign portfolio investment.
And that's the next port of call for me, really, because if you listen to the CBN governor at the MPC meeting, his argument is, look, it's, sort of ensuring some form of stability in government's policy disposition for the FDIs to come in, and for those who are, waiting and not sure of what to do, they want to see that consistency in policy as well. But it's the third increase in MPC interest rate by the MPC, and the FDIs are not coming. What do you see in the eternal optimism of the CBN that is informing this continuous response to interest rate?
The FDIs will not come in, not now, because you're talking foreign direct investment, which are more long-term than short-term. The first people that would take advantage of an interest rate hike would have been an FPI, which is looking at the short gains. So they'll cut short any gains that they see, take a long position if it's necessary. So they'll most likely be actually buying a 365 days treasury bills, 90 days, 60. They're not. If you're lucky, they'll buy some bonds off you, which there would be, but they can cut the bond short at any point because your coupon can be traded. So for their own viewpoint is I'm in and out within a short period of time. They're the first point of call now. Interest rate at this level is a fantastic interest rate. So for any investor, if I look at it at 26.5, you most likely look at your treasury bill rate will most likely now be eating about almost 28. If a foreign portfolio investor is a fantastic investment. I come from outside this country, bring $1 million into this country, put a CCA, which is a certificate of import, CCI, into the country, and I buy Naira at the current 1,500, and I go and buy treasury bills at 28. Taking that, most likely the Naira is now finding its real value, which I think for all of us now, as of today, is between the 1,300 and 1,004. Towards the end of the year, most likely to appreciate to where we should see it at about 1,000 to 1,200. Now, if I'm taking an FPI position, I come in and I come and invest, and I take the position at 28 on the treasury bill, and I exit even in 6 months' time. Most likely I'm exiting at the same rate or even better. I'm walking out of this country with a fantastic 28% that is better than anywhere in the world. If you're coming from outside the U.S. or coming from the U.S. or you're coming, your coupon rate for any type of treasury is running between a 4 to a maximum of 7% coupon.
I want us to do a quick before and after. You've been in business for a while now, and a lot of people, yes, they know your commercial. I just have to mention that they see the commercial on television, fall in love with the brand. But the business you do now. So let's do it before and after. What was business like before May the 29th, 2023? And what is business like in this past 1 year?
If we have to be truthfully honest, it was disastrous. There were too many wrongs going wrong around us, and if we all say it was better, we're lying to ourselves.
That's before.
Before. We were in a bad situation. 3 different exchange rates. I'm a manufacturer. I don't think I actually got any of this money since 2016 or 17. If I look at the amount of money as any manufacturer got from the NIFEX or from the direct import and export window, or from whatever window they were calling it, in 5-6 years, it was 0. So we're looking at black market. So did we gain? No. The manufacturers lost massively. And when you look at it, maybe a few well-connected got. I'm not part of the few, so I'm not a politician, so I lost massively. But we invested. So when you're looking at your investment and you're using black market to determine it for the last 5-6 years, I don't think I gained anything. So take that, we got a knock. We got a knock on everything you could think about at that point in time. But the only good thing we had, I'll say at that time, was the incentive geared towards the interest rates within incentives on BOI from CBN intervention funds. That helped. And I think that's where the balance we have not seen yet here now is we all expected that things had to be changed. Yes, so there's no soothsaying about it. All participants in the election said the same thing. I don't think, when people say, I said, look, what did one party say that was different from each other? All of the 3 main candidates said, we're going to remove subsidy, we're going to converge dollars. So we got what they all said. The question is what happens after? And that was the knock for the manufacturers, that we were expecting something to happen there after this knock. So you create a gap. And I always look at it that in any situation like that, the convergence of exchange rate is going to mean that most likely, of course, that 440 we're hearing doesn't exist, so everybody knew that. And the gap then was 440 to about 700 or 800. We were going to get a convergence, most likely at the upper hand. Now you get the convergence, you get an exchange rate loss. It creates a gap. It creates a gap to any business. How do I close the gap? Because it's either I tell people to go home because I made an exchange rate loss to my business, and I'm sure everybody saw the announcement of figures coming out from different businesses, 50 billion here, 20 billion here, 100 and something billion in exchange rate losses. And you beg to ask the question, what next? You have to have both direction for both monetary policies and fiscal policy balancing. And that is where I think we're having a bit of gap in today's system. Nobody's arguing on. I think when you listen to everybody talk, nobody's arguing on what is being done, because we are all agreeing that we had a bad situation. Certain things need to be corrected for us to move forward. But then when you correct it, what next do we do? And
that is the patting on the back we talked about.
Correct.
And I think we should explore that now.
That is where we're going now. Now, if I'm them now, I'll be looking at it. How do I save manufacturers from this? I'm not a believer of subsidizing consumption. It never works. If you subsidize consumption in any way, you're just draining what you have. Now, if you subsidize productivity, look at every developed world. They only subsidize development or productivity. Now, there's no crime anywhere in the world. If you look at the best producers of in agriculture or mechanized farming in the US, let's be sincere, they're still being subsidized heavily by their government. But guess what? They have food security. So there's certain things that must play, irrespective.
So you're saying the palliatives regime is certainly not the way to go, but rather productivity, manufacturing should be subsidized. We need to look
at it. So if you go back to your incentives in terms of interest directed at certain, and we've done that to manufacturing, maybe aviation, and whatever sector, and you do a direct incentive, both on macro and on micro. So on macro, which is your monetary policy, yes, the CBN needs to come up with palliative. We're not saying CBN, and I agree with them, that CBN is not a bank. But we have Bank of Industry. We have development banks. We have
Bank of Agriculture.
different types of development banks whose job is to do what CBN is saying. Go and create incentive, but they need to create the financial instrument to make it plausible for them to have an interest rate that is capable of balancing the act. So if I go and if CBN goes and creates an intervention fund through BOI, most likely BOI will not be selling it at 32, 33, 34%. They'll be reselling that fund at most likely at about 9%, which has worked. But it is now the job of BOI or any other DFI to do with that. That's one. Secondly, fiscal policy. Now, we have a fiscal policy imbalance today, massive ones. Now, I'll take, for instance, the issue of the custom exchange rates. That thing is changing, no different from a BDC. I don't know what they're doing.
The customs duty, right?
Yes, it's shocking. You can literally not plan. Now,
so, sorry, is this a problem of coordination?
I think it's a question of even understanding or clarity. Now, there was a clear, defined circular from the Ministry of Finance saying that if I open a Form M at, say, 1,100, the day that goods comes to Nigeria and I want to pay the duty, it should be 1,100. Be sincere. The day I actually went to action that circular, they said they too saw it on paper and saw it, but nobody actioned it. Really? And this is no joke. The custom did not take it onto account because they said, we all saw it on the news like you saw it. But did they tell us to do it, to act on it? There's nothing defined on our system that says we should do it.
Come on.
But is it also because of the inconsistency or the instability in the foreign exchange rates of the naira to the dollar?
You see, there's nothing wrong with inconsistency. The problem of the FX positions, it is how it affects other things that you're looking at. There's a difference between a monetary policy that is affecting FX and a fiscal policy you have control over. Your physical policy on the customs side is customs, Ministry of Finance. Yes, with an influence of CBN because they're the ones handling the Form M scenario and they're the bankers. But at the end of the day, someone is deciding the policy. And the Minister of Finance, made a decision. This is what we should do. But there's no clarity to custom. So when you go there and ask for it, they say, can you provide me a document that says I should do this? And seriously, none of us also have
it. As a judge, not for one, that means there's a lot to talk about when it comes to these things. And minds like you are needed to keep pushing this conversation. I wish we had a lot of time, but unfortunately, we don't have the luxury of time at the moment. But we can imagine what the manufacturers go through. Let's hope. So before we let you go, we know Kayode had asked you in the past, but we asked direct questions. Rate this government on 100 in the last 1 year.
I'm going to go with the caveat of what Bishop Cooker said. It is literally impossible to rate a government in 1 year. I'm also talking from an economics perspective, and a financier and a manufacturer. It's not possible. What we're rating is the beginning of a correction. How do you rate something that was bad and someone is correcting it at its first year? Anybody giving data on those figures is really just giving a misguided data. I wouldn't subject myself to that. But if you ask me that same question half year into their thing, because it takes time. It's just like inflation. If it goes up, it doesn't come down overnight.
So let's put it differently. Result and effort. So rate result, rate effort.
Okay, if you do it that way, it will work. Now, effort, I'll say they're getting it right on the effort. There'll be about 60-70% on the effort. On the result, I'll knock it down to about 50. And because it will take more time to see it, but I'll drop them down to 50. The efforts are there, which is what is needed to be done is being done. The question is, how do you implement it? That is the result. That is where they lose the points. And they need to be a bit more consistent in balancing those results from the effort. And when we see that, all of us will see it. The manufacturers will do a lot better they'll actually see the positivity of where they're going. But as of now, it's a tough call to actually say they're seeing a good side of it. But can it be better? We need to stay, for me as a manufacturer, I need to stay optimistic. If I don't, most likely I shouldn't be in manufacturing.
Justin, in a few words, when would it be ideal to assess the government? 2 years' time or 3 years' time?
You said that halfway into
Halfway into it, you should have a clear direction of where they're going. And by the third year, I think you're right. The best time really is the third year. But at halfway, which is the second year ending, we should have an inclination of what the effort is going to turn to in efficiency.
Mr. George Onofo, quite insightful talking to you, and seeing the Coleman wires in person. You know what I'm talking about. The CEO of Coleman Wires, George Onofo, thank you so much for coming on the program and for giving us your perspective. And I wish the manufacturers the very best, because at the end, it hits us if it doesn't get well with you guys.
Yes.
Thank you for coming.
Thank you very much for having me.
Okay, when we come back after this break, the genius himself, Julius, joins us. You don't want to miss it. Join us again.